ではご紹介します。市川さんです。
お願いします。I am Takafumi ICHIKAWA. Today I will talk about my situation on work. I work for a company as a staff of accounting and financial division. I am engaged in managing subsidiary companies and preparing consolidated financial report. I receive reports from subsidiary companies, then summarize it and report to the board of directors. A while ago, the directors said they need more information about the business performances about the subsidiary companies timely. Especially the cash flows is very important to them. The company I work for will increase investment in machinery, factory, or other equipment. To buy these, we have to know how much money we can spend on them. So we argued how to understand our cash in and out situation, and we got a conclusion to prepare a cash flow statement by each company of our group. But it's difficult for us. Actually, we disclose consolidated cash flow statement quarterly, but the statement is based on poor data. So I think if the subsidiary companies understand the necessity of cash flows and how to prepare it, we can prepare it more smoothly and accurately. So I decided to inform them the necessity of cash flows and how to prepare it. Now, I will try to tell you what is the cash flow statement and how to prepare it as if you are the staff of subsidiary companies. Companies usually prepare a balance sheet and a profit and loss statement. They are stood by BS and PL. You can call PL as income statement. They are same. We have to receive these two kinds of statements from subsidiaries. A balance sheet indicates financial positions, provides a snapshot of business health at a point in time. A balance sheet has two blocks, left side and right side. Simply saying, left side shows what company get and how much money remains, and right side shows how these things purchased. For example, let me explain by my own financial position. I am a company employee, so company employee living by getting salary. So gain from salary may put in right side, and there may be put a little bit of cash and furniture in the left side. I hope I can write house or car in the left side someday, though. Next, I will tell you about PL. A PL measures a company's sales and expenses during the specified period of time. It shows the financial progress. A PL indicates net profit subtracting cost of sales, selling expenses, and administrative expenses from sales amount. Again, let's see my PL. I receive salary from the company I work for. I pay transit fee, buy some business suits, etc. for work. So salary minus those expenses are my gross margin. I buy a business suit not frequently, so almost all salary is my profit. My business suit is worn out, though. Those two statements indicate the company's financial condition or company's scale. But we aren't able to know how much money the company got during the specified period. We can know net profit by a PL, but we cannot know how much money we can spend or we receive. I don't have any bank loans, but let's say I do. I can plan repayment based on my salary schedule. However, if the salary is not paid by the due date of repayment, I would bankrupt, even though I have enough monthly profit. So it's very important to know the flow of cash, how much and when we can get or spend money, besides preparing a balance sheet and PL. Let me get started to tell you about cash flow statement. We can know how much money we got or spent by preparing it. The cash flow statement will summarize the cash flows so that net cash provided or used by each of the three types of activities is reported. The types are operating activities, investing activities, and financing activities. The statement provides information about the cash generated from a company's daily operating activities. Operating activities are those which produce either revenue or are the direct cost of producing a product and service. The figure must be plus, otherwise the operation may be failure. Investing activities include buying and selling non-current assets, which will be used to generate revenues over a long period of time, or buying and selling securities not classified as cash equivalents. You can see whether or not a surplus in operations is being used to grow the company. The financing activities section of the cash flow statement shows repayment of debt, payment on interests, and borrowing of funds, as well as injections of capital and payments of dividends. Cash flows from the three activities sum up to the change of cash in the year. The starting balance plus the change equal to the ending of balance. For your better understanding, I will reveal my cash flow. Net profit of my income statement in this year is 2.8 million yen after being deducted income tax, insurance, cost of one and suits. But the amount of taxes, insurance had to be my income originally. So before being deducted taxes, my income had to be 5 million yen. I spent money around 2 million yen from the income for food, light, or drink for my living. After that, the cash flow by the operating activities is 3 million yen. I bought suits, textbooks for my self-improvement to get skills for work. Suits amounted 100,000 yen. Cleaning was 50,000 yen, and books was 50,000 yen. Oh, the money I spent for my improvement was only 200,000 yen. My activities as an office worker may have been stagnant. Maybe I should invest on myself more. Anyway, the cash flow from investing activities is 200,000 yen. I saved some money remained in a bank. I deposited it in a Sony bank. I saved up 2.5 million yen as a time deposit in a bank in this year. So the cash flow in financing activities is minus 2.5 million. Then the cash in my wallet and deposit in the bank increased 300,000 yen. I deposited 1 million yen as of the end of the last year. The amount have been 1.3 million yen in this year. Do you understand? I hope you can understand the flows of cash which we cannot know from BS or PL. Oops, the time is over. I will teach you the detail of how to prepare it next time. Bye bye.